Have you heard about the huge increase in conforming loan limits? Kyle Sutera will break it down next. You're definitely going to want to watch this one. Monster news coming out of the mortgage world, and to me, kind of under the radar news. I know we've talked about this.
Yeah.
So this is Kyle Sutera with Mortgage America. You've probably seen him on the show before. And the news coming out in December from the mortgage industry, as of 2022, conforming loan limits went up literally $100,000. And a lot of people don't know what that means when you go from conforming to jumbo. So that's where Kyle's going to break it all down.
Yeah. $100,000 difference. So what the conforming loan limit is Fannie Mae and Freddie Mac, the governing bodies or the people that insure buy conventional mortgages, they set a limit to how much they're willing to extend out on a loan or lend a buyer. So any loan limit or any loan amount above that amount, it turns into a non-conforming loan or a jumbo loan, which can be much more difficult to obtain financing on. The interest rates can be higher. It may require more down payment. They have to have stronger income. So it can be much more difficult to get loans above the Fannie Mae conforming limit. So an increase in $100,000 is pretty astronomical when you think about it. So the limits last year were $548,000, and they just went up to $647,000. So it really opens up the ceiling for a whole nother range of houses, especially in our area, that someone can get normal conventional financing on with better terms, lower down payments, and just a smoother loan process.
Well, you bring up some really relevant points, and just to give everyone some perspective, when you think about what happened in the market over the past 20 months or so, we saw 10% appreciation year over year. So you're seeing $100,000, or it's actually 99, I think, to be exact, but we round it up, and at a $550,000 home, so it's kind of accommodating for the price increase a little bit, one, which is really good, but then two, you're also able to buy the home with less money down. And to me, having seen people go through the jumbo loan process, I don't think people realize how invasive that is. So do you want to talk about maybe what a normal loan process looks like versus a jumbo loan? Just maybe one or two highlights, because people don't get it.
It's basically, the nice thing about having Fannie Mae and Freddie Mac and their conforming loans and regulations is that it's a blanket regulation, essentially. So every loan across the country, for the most part, is going to have the same underwriting criteria. Whereas a jumbo or non-conforming loan, it's kind of subject to whoever's doing that loan. And it's a very large loan at that.
Yeah,
so
risky.
Exactly. So banks are just they put more scrutiny on their underwriting. They have different nuances and overlays, and it can, especially self-employed people with commission jobs or alternative income that's not your general salary or hourly position. It can be difficult, and a lot of buyers don't realize how much red tape they may have to jump through in underwriting. So yeah, it's definitely a difference. And then in terms of interest rates as well, not all the time, but in general, conforming rates tend to be a little bit lower than jumbo.
Well, I remember pre-pandemic, or right when the pandemic happened, jumbo rates spiked like a percentage point. So normal rates were coming in like 3.25%, but jumbos were at like 4 1/8, 4.25. Now they've come back down to earth a little bit. That probably has to do with Fed policy, but the point is it's costing you more money, at least more cash out of pocket. You don't have that like 5% down, 10% down option in a lot of cases that you do with the conforming.
In most cases, yeah.
Most cases.
And you definitely don't have, a lot of people don't realize this either, with a Fannie Mae or Freddie Mac conforming loan under that $647 cap now, you can go as little as 3% down for first-time buyers with very favorable terms. So that's a huge factor, especially for people that may not have saved that full lump sum that they wanted to put down. But if you tick up over that conforming loan limit, that option goes away.
Given the price point here, I'm clear our market's going to really see an impact, because knowing that right about 7% of the homes that sell every year in Chester, Delaware, Montgomery, and the city of Philadelphia are below that 700 or so price point, this is going to be huge for a lot of people, number one.
It is. Yeah.
And if you're a millennial, and I think this is really important because there's 78 million millennials out there, about 35 million buyers that's going to produce with households forming together, and some people aren't going to buy homes. A lot of them don't own properties. So you mentioned that first-time home buyer, you can go 3% down on a $600,000 home. That's life-changing. That can get you into a property where you can stay there maybe 10, 15 years or forever, because depending on where you're moving, I mean, that gets you in at such a better spot. So that's why this news is so important. I don't think people really get the impact. So last question I got for you. What does this mean for the market? What does this mean for people thinking about buying or selling right now? Because I think it's going to hit both ends of the spectrum.
Yeah, it does. It really does. For sellers, it means that they're going to have a wider range of buyers. And from a buyer, it just means that your ceiling's now higher. Your ceiling is lifted. So, as inventory starts to pick up here coming into the spring and summer, I think it's the perfect time to get out there and see what you can buy and see, what is available to you, maybe in that tier that you weren't able to access previously.
I love that, because I found that the people that maybe stretch a little bit, especially knowing what's coming down the pike with mortgage rates and interest rates, this is really critical, that if you can stretch now and get into a home you can stay in a few years longer, you're saving on transaction costs. You're not going through that hassle of moving. And the Fed's going to raise rates 2 to 4 times this year. Like they're pretty clear about that. So if you can lock in at 3 1/8 or wherever rates are coming in right now, that's going to be really valuable, and you can stretch that next home. So, Kyle, great job as always. Thanks for breaking this down.
Thanks for having me.
Important news. Write this down. If you're thinking about doing a purchase, you got to talk to somebody like Kyle who gets this, because it affects your finances. We'll catch you next week. You're definitely going to want to watch this one.